Let me walk you through something that is quietly happening in Florida right now. Because if you just look at listings, pricings, or headlines, you won't see it. Homes are still for sales. Buyers are still looking. Some sellers are even cutting prices. So on the surface, it looks like the market is moving. But behind the scenes, something keeps stopping deals right at the finish line. And that's the part nobody really explains. Here's what's strange. A buyer makes an offer. The seller accepts. Inspection happens, financing gets lined up. At that point, most people think that the hard part is over. But in Florida, more and more deals are falling apart after all that. Not because the house failed inspection. It's not because the buyer changed their mind. Not because the price suddenly didn't work. The deal just completely stopped. And when that happens, everyone is confused. Now, normally when the housing market slows down, it's pretty obvious why. Rates goes up, prices gets too high, buyers step back. You can see it. And that's not what this is. This isn't a buyer's disappearance. It's a transactional failing. Homes that should close don't. And the reason usually doesn't show up on the listing. Here's the part most buyers don't realize until it's too late. When the lender looks at the property, they're not just looking at your credit or your income. They're looking at whether the home can actually meet today's requirements to close. And in many Florida properties, especially condos, that's becoming a problem. Not because someone didn't pay a bill, not because repairs weren't done, but because the property itself cannot meet coverage standards required to finalize the loan. When that happens, the lender doesn't negotiate. They stop. This is hitting condos first, and that's important because condos don't operate like single-family homes. They rely on shared coverage, shared rules, shared risk. If the association cannot meet certain requirements, it doesn't matter how strong the buyer is. The deal doesn't move forward, and that creates a strange situation. People live in these buildings. They can pay their fees. They can stay put. But selling becomes much harder, sometimes impossible. So you ended up with homes that exist, buyers that exist, money that exists, but no closing. And here's why you don't see this clearly in national housing data. When a deal fails this way, it doesn't make noise. There's no crash headline, no sudden drop. Listings just sit longer. Contracts quietly fall through. Inventory builds without explanation. From the outside, it looks like hesitation. From the inside, it is blockage. So if you are a buyer, this changes the game. It's no longer just, can I afford this? Or can I qualify? It's now, can this property actually close on today's rules? And that's not something that most people think about early, because they never had to before. And if you're a seller, especially in a condo, this is frustrating in a different way. You can price it right. You can make repairs. You can be flexible and still watch the deals fall apart for reasons you don't control. That wears on a market not fast, not dramatically, but slowly. Now, this is a very much Florida story right now. Dense condo markets, coastal exposure, stricter requirements. Florida tends to feel these pressure points first, but it rarely stays isolated. Other states usually follow just later. So this isn't about fear. It's not about panic, and it's not about emotion. It's about whether the housing system still works smoothly. When buyers want to buy, sellers want to sell, and deals still cannot close, that's not a price issue. That's a functionality issue. And Florida is showing us what that looks like in real time. If you want to keep an eye on where housing pressure shows up next, don't just watch the prices. Watch where the transaction stops working. That's where the real signal starts. Thank you for watching.